One of the things you can do for yourself in this current regime, in this current geopolitical tension, is using confirmation entry around your points of interest. You can mark out a valid point of interest and price will disrespect that point of interest as if there was nothing there. Use entry confirmation. You might be a trader and you're following some traders online just because they go for the risk to reward of 1:10 and they use limit orders. Your strategy might be refined blindly. Your entry might require entry confirmation, not limit orders, but you go for limit orders and you keep saying your strategy is not the best and you keep switching from strategy to strategy. This channel is for mostly beginners and advanced traders who are approaching Forex the wrong way. And if you want to change the way you execute, watch this breakdown I'm about to do, which I did. This trade I took on GBP USD and NZD USD. I have the before and the after right here. You can see on my screen. As a trader, you can have multiple points of interest. And the best thing to do for yourself is mark all of those points of interest. Learn how to mark valid points of interest. If you have 2 points of interest, don't do more than 5. Don't mark more than 5 points of interest, 6 points of interest. No. Learn how to filter your points of interest. Mark those points of, learn how to mark valid points of interest. Wait for some sort of reaction around those points of interest and you execute. I bet you are going to see some changes. Also, don't go for high risk to reward. You can see other traders, they would put 1:10, 1:15. In reality, some of them will not hold those trades to TP, but on TradingView or on their platform, they are showing you 1:10. Some of them, quote unquote, some of them don't hold their trade to TP. They are just there to show you they can do it, of which they are not practicing. Let me show you some trades I took on GBP USD and NZD USD. Let's go to the higher time frame. Let's go to the 4 hours time frame. All right. Now, I already taught you guys how to get your bias. All right. So I'm not going to go into that in this video. I mapped out my valid points of interest, which is a breaker block, right? And all I needed to see is some sort of reaction at those levels. Price is coming to do 2 things. It's either to fill an imbalance or to take out a previous high or all highs or lows. Mark out your points of interest and wait for price to either take out some sort of liquidity. Tap into your points of interest. This is what we call fuel. Liquidity acts as fuel. And if you want me to do a video on liquidity, I will not do in this video. I am going to do another video separately just for liquidity alone. Mark out your points of interest and wait for some reaction at those levels. This is a CRT method, which you all know. Price took out this previous candle, took out this previous high, tap into a point of interest. All I need to do is to see some sort of reaction on the lower time frame. I need to go to the lower time frame, like the 15 minutes, to see what price would do. On the 15 minutes time frame, price took out this previous high, took out some sort of liquidities. You see this Asian high liquidity and this all lows was taken. These all highs were taken and displaced to the downside, leaving back a fair value gap, and also we have a liquidity. All I needed to do is execute. This was a nice entry confirmation because a true market structure shift would always take out liquidity. Whenever price wants to reverse, you can go and backtest. Whenever price wants to reverse, it's either price will fill a fair value gap or will take out a previous high liquidity, because a lot of traders are selling from these levels. A lot of traders are selling from these levels. Whenever price displays to the upside, traders will feel okay. Those who trade on the lower time frame without knowing the higher time frame direction, they will feel like, okay, we are in an uptrend, and they will be buying from this level, of which this is just liquidity. Learn how to get the right liquidity. Learn how to pick liquidity. Learn how to use liquidity. It's not necessary for all strategy, but if you are someone you want to have consistent result, try to use liquidity. I don't care about your strategy, but just try to understand liquidity. Whenever price does this, people are already, they will FOMO and they want to buy to the upside, and price would sell to the downside, and they will be asking themselves, what's happening? This is because they don't understand the logic behind the patterns they trade. Trade logic, not pattern. This is another form of entry confirmation. Price will push into your point of interest, tap into your point of interest, right? You need to see something like this, a CRT. These are some of the entries you can get, waiting for price to approach, giving you a CRT, because this is liquidity. This is because they know this candidate manipulated a lot of people. People, just with this candidate, a lot of people are already buying. They are going to manipulate this high, and then you need to go to the lower time frame to get a true market structure shift. For you to know if this is a true market structure shift, market would do something like this. Market would take out this previous high. After market, because now let's say we are pushing to the upside, right? A lot of people are already buying from here. A lot of people are already buying from here. What are they going to do is, what they are going to do is they are going to take out these lows. They are going to take out these lows. It's going to come in two ways, right? This is going to come in two ways. Now, if price haven't approached your point of interest, you are going to find this scenario number one. This scenario number one, you will find it if price have, let's say your key level is here, right? Let's say your key level is here. They know you are going to FOMO and you are going to sell from here. This is a valid entry, but you're using it at the wrong zone. Price will just buy to the upside and tap into your point of interest and then give you the true market structure shift. This is what we call a true market structure shift. I repeat, if price haven't tapped into your point of interest, you would likely experience this. But if price approach into your point of interest, you are going to experience this. Market would do something like this, break structure. This is a true market structure shift. So the best thing you can do for yourself, you are using the right confirmation and you are complaining, this is not working for me. This is because you haven't mastered how to mark valid points of interest. Stick to one method. If you are using MS&R, stick to MS&R. If you are using demand and supply, stick to demand and supply. If you are using all highs or lows, stick to that. Any strategy you are using, use this entry confirmation. Go to my videos. I made a video, detailed information. Some people, what they do is they just mark out all highs, right? They just mark out all highs or daily lows. All they need to see is this form of structures to present itself. They just mark old lows. Let's say this is an old low, right? They just want to see some sort of reaction. If they can find this around those zones, right, they are going to execute. If they can find these candles around those zones, they are going to execute. And also, if price can tap into my point of interest like this and close like this, there is no need for me going to the lower time frame. I am going to execute from here because this pattern is a reversal pattern, and I'm going to execute from here to the downside. Because this is what the next candle is going to do. The next candle would do something like this. The next candle would form like this, push to the upside, then reject back to the downside like this. The next, you can go and backtest this. This will act as a key level. This will happen and then reject to the downside and sell to the downside. This pattern works all the time, but make sure you are using it at the right zone. This is not a 100% strategy. This is not a 100% entry model, but majority of the time you are going to be right if you use this. Understand the logic behind it. Don't just trade it blindly. Just don't mark random key levels. What you can master that will help you in this current regime is knowing how to mark valid points of interest. Like, train yourself to mark valid points of interest and wait for this pattern. Learn to know when to go in and when to step out. I'm repeating this. I'm putting more emphasis on this. Take your time. If you can only backtest how to mark points of interest, like backtest how to mark points of interest, how to get valid points of interest, you will filter a lot of wrong key levels. Because the market is there to lure you. The market is there. They know what you're doing. I'm not going to put more emphasis on this. If you want to change your trading journey, if you want to change how you approach the market, do the work yourself. I won't do it for you. What I can do for you is give you information that will help you. Now let's go to another entry confirmation that I took on NZD-USD. Now, this is the 4 hours time frame. All I did was, you see, I filtered all these points of interest, and this point of interest was valid. And the reason why this point of interest was different and it was valid was just because of this fair value gap. Whenever price displays to the downside, whenever price breaks structure to the downside, whenever price displays to the downside, if price is coming for a pullback, price is coming to do two things: take out liquidity, or fill fair value gaps. Already with the experience, I knew price is going to take out this or fill out this fair value gap. This is a single candle liquidity. We had a displacement to the downside, leaving back a fair value gap. All I needed to see is some sort of rejection around those key levels. And what did price do? Price, this is the before trade. You can check, this is the before trade. All I needed to see is price rejecting at this point of interest. After price rejected, now imagine you just mark out this key level and set limit without waiting for confirmation. Now you could have hit stop loss here, hit stop loss here, and here there will be no capital for you to execute. Now I went to the 15 minutes time frame. After getting this, I went to the 15 minutes time frame, and what I saw was a nice break of structure to the downside, leaving backward liquidity. On my last video, I did emphasize on this. A break of structure is going to give you liquidity or fair value. If there is no liquidity, you are going to have a fair value gap for you to confirm this is a true market structure shift. For you to confirm this is a true market structure shift. I entered from here and boom, to the downside. If you are not making good money from Forex, check this. Are you using entry confirmation? Does your strategy need entry confirmation? Does your strategy need you to reduce your risk to reward? Check these things. It's not all about changing strategy all the time. Check these things. This might help you. And if this video helps you, and if you found value in this video, like, share, on notification button, because I'm going to bring more value for my followers. Like, share. Peace out.